Hi, I'm Kevin Knaus with InsureMeKevin.com, and I'm going to be going over the Covered California renewal period for 2021. The good news is not a whole lot has changed. When you go through the renewal process, if you have not already been automatically renewed, it will be just like submitting a new application, which you need to go through and make sure that everything is correct, including household size, if you've changed jobs, income, and things of that nature. Now, you will have until the end of October 2020 to do your own manual renewal. As of October 31st, Covered California will start doing batch processing for automatic renewals. So they will just take the information that you have and put that into the application for 2021. That could be an issue if your income is low and the 2020 income is in the Medi-Cal range. So that's something you're going to want to look for and make sure that if your income has gone up, that you have increased it within your Covered California account. Otherwise, you'll be put into what they call a carry forward status of Medi-Cal eligibility until you verify or increase that new income amount. So once you open up your Covered California account, it'll just be right up at the top. It'll say renew, and you just push that button, and that'll just take you through the application where you can, again, the application just changed quite a bit. It seems like on a monthly basis. So if you have it in your Covered California account, some of the screens may look differently. They have added a few additional questions or expanded on questions like this one for the tax filing status, because that can be confusing, and this helps people just really narrow down who the primary tax filer is and how they are filing with that person on their federal taxes, because that's very important. If you click that you are married filing separately, you will not get the subsidy, because you must file married filing joint if you are married in order to be eligible for the subsidy. And sometimes I guess some people had put that down, and then when they went to file their taxes, they did married filing separately, and then they didn't get the subsidy and they had to pay it all back. That's no fun. So once you get to the income section, this is really critical, because this is where you do need to review your income. And a lot of things have changed in 2020 with unemployment and decreased compensation. So it's been all over the place. So on that screen, you can add and change. And the big thing you want to look at is that projected household income. Make sure it is in the correct range. Also, look at the monthly income, because it's the monthly income that determines whether you're eligible for Medi-Cal or not. And that can be a little bit goofy if your dates don't match up. So if you have, say, a job starting in February, but no income showing in January, you will be determined Medi-Cal eligible. So the start and stop dates of your income are very important. Also, for determining the overall household income. So you may have had a job that you know will end in March. You want to make sure that that's in there, because your subsidies are based on your total estimated household income, and you don't want to underestimate the income, because then you may have to pay back some of those subsidies. Once you go through all of that, and you sign the form and click everything through and attest to everything, you'll get to the kind of shop for the plans, and it'll show 2020 or 2021. It will default to 2021 in the renewal, and I would assume also if you go in to make a change after you have been automatically renewed, it should default to 2021. But always check to make sure what year you're working in, because if you inadvertently make changes to 2020, that'll kind of goof up your current subsidy and enrollment. So you want to make sure that you are in 2021, and then you just go shop for plans. Now, when you do go shop for plans, the Covered California Shop and Compare tool will show you what is your current plan. So you can kind of see within that metal tier how things have changed and where you want to be. So you won't be lost. Just look for the little blue field there, your current plan. Isn't that nice? Now, Covered California says the rates only went up like 0.06%. And those are the overall raw rates. They don't necessarily translate into what you or anybody else who's receiving a subsidy will actually pay in terms of an increase or a decrease. Now, on this particular example, we see that the second lowest cost silver plan has decreased. The subsidies are all based on the second lowest cost silver plan and to make it affordable. So this Blue Shield PPO went down 2%. Then if you're in the Kaiser plan, it had a 3.7% increase in this particular rate, region 5. So because the second lowest cost silver plan went down, but your rate went up, your subsidy may actually be lower in 2021 than it is in 2020. We also have to remember that the rates are based on your age. So everyone is a year older and the rates will be higher if you're 14, 15 years old or older, because the rates are the same for 0 to 14. So you may see a rate increase higher than 1% just because of where the second lowest cost silver plan falls in your region that is available to you. Now, conversely, if you're in a region where the second lowest cost silver plan went up 3.7%, like in this Kaiser example here, and your selected plan went down, again, the subsidies are tied to that second lowest cost silver plan. So it went up 3.7%, so you're going to get a bigger bump in your subsidy, which may overtake any increase for your age. And some people are seeing that their rates actually go down based on their selected plan and, of course, their income for the year. So it can be all a little bit confusing, but you just have to kind of do the best job you can and go forward. If you have any questions, leave a comment below or give me a call or send me an email. In terms of the health plans, hallelujah, not much changed. The biggest change is the bronze, silver, and gold plan maximum out of pocket went from $7,800 to $8,200 for an individual, and you double that for a family. So a $400 increase. Then on the gold plans, some of the co-payments went up slightly. Primary care visit went from $30 to $35, urgent care $30 to $35, and then and imaging went down a little bit. We see from $275 to $150. So it's nice that the plans aren't going to change too much. If you are in a high deductible health plan, HSA compliant, health savings account compliant, the deductible maximum out of pocket for the standard bronze HDHP has increased from $6,900 to $7,000. So not too bad overall. You may see, depending on where you live, a few new carriers being offered to you. Anthem is expanding their HMO plan into Orange County, so that might be an option. You always need to check to see if your preferred providers are in any of the medical groups within that HMO and what hospitals they have in their plan. Anthem has also expanded their EPO plan offerings into Mono, Imperial, Kern, and Inyo counties, so a little bit more options for people living in those areas. And then Oscar has also expanded, you can't see it very well on there, but San Mateo County, Oscar will be there. They have been in San Francisco, and Oscar's a good plan. Everything seems to work with them. They're a little bit more tech-oriented in terms of, the mobile phone application and whatnot. So, but it's worked for many people, and they seem to like Oscar, which is an EPO. And remember that the EPOs have no out-of-network coverage, unlike a PPO. The dental plans, Premier Access is withdrawing, but Guardian is coming in, so the rate should be probably pretty much the same. I do not know if you are in a Premier Access plan because it's being terminated, if you will be enrolled into the Guardian. Assume that you won't be and that you will need to enroll in a Guardian plan because the provider network should be the same. Blue Shield will be offering HMO and PPO plans through most of California, through Covered California. They had always been available off exchange. Now you'll be able to couple them within your Covered California account. And then all the other dental plans are remaining the same. So that's kind of the quick overview for the renewal. Again, if you have any questions, go ahead and give me a holler on the phone, email, or leave a comment below, and I will do my very best to answer them. So keep your masks on during this COVID crisis, and we'll talk to you soon. Be safe.